allowed him onto the show. Paul Theron from Vestact joins us this evening. He's lending a helping hand to regular David Shapiro from Sasfin as we make sense of the week on Squawk. On the show tonight, the JSE breaks record after record after record, despite being massively expensive already. We know Theron's going to fight about that point. MTN bleeds clients in South Africa. Not that it matters when you've got 200 million others across Africa and the Middle East. Plus, this evening, construction companies reporting improved profits, but the shares remain unconvinced. We have another senior executive leaving Standard Bank. One-time leadership contender Peter Wharton-Hood going to join the Germans. And while Carl Icahn takes to Twitter to boost Apple, BlackBerry's days on the stock market look numbered. We've got Sibanye getting ready for war with a 2 billion rand war chest, with Harmony saying, for what? Harmony certainly on the back foot. And later on, 12 things Elon Musk wants to build. All this and much more coming up tonight on Squawk. Thank you for joining us on Squawk. You're watching CNBC Africa, first in business worldwide. David Shapiro from Sasfin and Paul Theron from Vestac join me to get some understanding of the latest market madness. And it is market madness, Paul Theron. I mean, 43,000 on the all-share index on Wednesday. The market has only been more expensive than this in PE terms 3 times in the last 50 years.
Yeah. It should be at 50,000. I'm shocked, disgusted that it isn't. Why? Because we've got Europe, strong recovery. As I said months ago, you could see those green shoots coming. US has been strong. China's numbers, the supposed deceleration now looking like it was overcalled. So I think we're going to record highs fast, and these numbers are not high. I mean, the profits are there to justify the levels.
Do you think so?
They are. Look, I love markets that are bullish. The only thing is that green shoots, those green shoots that Paul's talking about, they're not going to grow into redwoods. They're going to grow into little bonsais. So I'm glad that Europe is turning around, but I think there's still a lot of struggle up there. Unemployment very high. Unemployment in the UK high. Unemployment in Europe still very high. A lot of the peripheral nations, Italy, Spain, still in recession. But it's where I agree with Paul and where I'm still bullish is that I still think that there are corporates that can still operate very profitably despite the global economy.
But this is a market on an 18 times multiple, average 18 times multiple, with massively undervalued resources, massively overvalued. 18. Absolutely. So what is the
forward is always 10 or 12 or something reasonable.
I think
depends what your benchmark
Bruce, we're getting into a situation which is concerning, and I think you have to separate the market into different kinds of classes. First of all, the offshore side I can live with. With Richemont, British American Tobacco, all of those, I still think those are where we're going to take the lead from. We're getting a recovery in resources, which hopefully will go through and continue. But then you've got the local stocks, and they're starting to worry me. They are starting to look pretty high. And I'll just give one example, because I've always liked City Lodge, whose results came out yesterday. And I've always bought them for dividend yield, which was 5% or thereabouts. And suddenly you look at it and say, hold on a sec, great results, 2% dividend yield, 2.5%. Do I really want to take the risk? And that's where I'm finding it difficult to find those entry points.
When managers of companies tell me that, it's a long-term play, this. We build our hotels for the long term. We don't build them all in 1 year for the long term, surely. And that's what they were almost guilty of.
But they got ahead of themselves a bit because they got second guessing that 2010 thing.
It
but
wasn't
to be
about
fair
the World
to them,
Cup. It wasn't about the World Cup.
They are going to see occupancies rise from that 62% level back to like 80. And then the profits are going to be flowing in the corridors.
I asked David Ross, I said to him, what does it take to get back to an 80% occupancy level? And he couldn't give me the answer.
They just have to wait because now nobody's building anything new, right?
But they've got a Monday to Thursday market. They have not successfully captured the family market Friday, Saturday, Sunday. They've got at least nearly half their week hotels are lying virtually dormant because their business
this conversation feels to me like the conversations we had in 2003, 4 and 5. And then we know what happened after that.
I think what you can't ignore is the underlying economy. We're growing at less than 2%.
Yeah.
So when manufacturers are not making money, they're going to start cutting back on travel. They're going to cut back on expenditure. Miners are not making money. banks are not even making money. So you're going to find that it's going to be very difficult you find travel generally slows down. So
the big
you can't
difference,
ignore the underlying economy.
I'm busy trying to find with him.
Oh, I see.
The big difference between now and 2003, 2004, when we were having these conversations, we hadn't had a credit explosion in 2003. What drove the growth in 2003 right through to 2008 was a massive explosion in credit. The banks have now exhausted their mortgage holders, they've exhausted their credit card holders, they've now exhausted their micro-lending clients. There's no more credit to be had because now the banks are hyper-conservative and their customers are over-indebted.
But we've got 50 million people in this country. There is an ongoing
A third of
process
whom can't get a job.
Family and household formation and people entering the employment market and coming off. I've heard all this kind of stuff before. The supposed end of the world scenario where everybody's tapped out and so on, it just never happens.
When do we get to 50,000 on the all share then, Mr. Bull?
I would say probably within a year and a half, that kind of thing. And you know what? It's not going to be driven across the board. I think it's right to say the economy isn't all coming up roses. That's obvious. And there are certain parts of the exchange that I wouldn't touch with a barge pole. All these companies with cyclical earnings, with industries in decline, those are the ones you've got to avoid. But it's sectors like, telecommunications, healthcare, the retailers and so on, there's plenty of growth to come there.
No, I'm with Paul in that.
18 months.
I'm with Paul in that. I think you've got to be very selective where you go.
Or buy
hold
the
on.
blooming index.
Okay,
if you can give me 20% through stock selection over the next 18 months, I'll take the index. Thank you very much. Over 18 months.
But let's just go, Bruce, you've got to look at the index. Okay, the index is made up of 10 stocks.
Yes.
The big heavyweights. And those are the ones that will move the needle up to 50,000. So you've got to hope that the rand continues to depreciate, which it could do. And you've got to hope that the recovery in resources continues for that to happen. As we saw this week, why did we go 43,000? Simply, we had a rebound in resources. So that will move the needle. Whether EOH or Sibanye or Pinnacle, whether they double their price, it's not going to make any difference in terms of the all-share index. So for Paul to get to 50,000, we need my favorite stocks to keep going higher, and I'll back him on that.
Okay, well, you've got to know when you're beaten. 2 against 1 is simply not, I don't like it. Well, let's talk about some of the big stories in the week. Probably one of the big corporate gossipy stories, the one that we've got to touch on, is Peter Wharton-Hood. Once the inner circle of Standard Bank, there was a very tight team. They'd go off to watch rugby games together, and things were looking good. 2008 happened. They actually started having to do some real work. They then had to reconsolidate the entire Standard Bank business. That's unfair, isn't it? Reconsolidate the whole Standard Bank business, bring it back home. Jacko Marie then threw in the towel, put 2 of the 3 top guys in charge. The odd one out, Peter Wharton-Hood, yesterday announces, you know what, I'm out of here. I'm off to go and join Deutsche Bank.
Well, of course he would. What's his future? Always going to be number 3. And I think he wants to be number 1 and will take a job where he can get to number 1. It's like having 3 male dogs in a room. Eventually they're going to fight. And I think in any change of management, whether it's at ABSA or any of the other major corporations, whenever new management comes in, you find people leaving. You'll probably see it at Pick and Pay. You'll probably see it at most companies where Kutafani comes into Anglo-American. You'll start to see big changes.
Cynthia Carroll did that already for him.
Actually, you're right. Yeah, she got rid of all the good managers. Yeah.
But isn't that a problem, though, when you've got the big dogs? It's a little bit like Jack Welch's General Electric, where he identified the 3 front runners to take over from him on the basis that the 2 losers would leave the business. It seems insane that you can't manage the ego sufficiently to keep the top people in top jobs.
Well, it's all a function of the insanely high remuneration that these fellows have, which is something I'm very against. In fact, I'm generally against the CEOs and senior management of most well-established big companies because of their grossly excessive remuneration. So what happens is that they all want those C jobs, so then they do go elsewhere, and there is a narrowing of the pyramid. But if you think about it, that class of jackos that included people like Bruce Hemphill at Liberty, Peter Wharton-Hood, and Ben Kruger to some extent, who's a little bit older, Sim Chabalala, they've all kind of come through the ranks, and there was only one opportunity at the top, well, 2, but there we go. So I don't know. I mean, he's going to go off on sure to do, but the story of these guys is you can even make massive mistakes. Peter Wharton-Hood made some awful acquisition for Standard Bank in Argentina, and he was forgiven for it. Bruce Hemphill made some shocking decisions in his early tenure at Liberty and was forgiven for it because, he was tied to the top man. That's how it works.
Okay, so good for Deutsche Bank?
I guess so. Deutsche, of course, is a different animal. It's got a much smaller capital base in this country. They're involved with investment banking and trading, that kind of thing. So I'm sure he'll find something to do useful over there.
Okay, well, we watch this space. Sibanye Gold. This has got to be worth a punt. Come on, this is a bit of fun.
It is worth a punt. It's worth a punt, and you've got to understand it's worth a punt. I'm not sure that I'd put it into a portfolio, a long-term portfolio, but so far he's managed to extract a little bit of value. No, Neil Froneman. We now got to see what the dividend's going to be and whether it lives up to expectation. But at the end of the day, we've gone back to the 70s. You know, these are wasting assets. They're going to work those assets. They're going to pay you out the cash, and what you've got to do with the cash is actually reinvest it, because this is not this is a slow return of the mining out of these old mines.
Well, you say you got to reinvest it back into the gold companies, or
it's somewhere else. In other words, this is not ongoing dividend yields, because somewhere down the line these mines will just fall over and die, which is the way that things used to be. And he's gone back to mining that way. There's going to be a lot of pain along the way, and he's got to be very tough to stand up against the unions. You know, he's already announced another 2,000 layoffs and so on. But I suppose under 10 rand, if you're really a mad gold bull, well, good luck.
But I'm not even asking.
But I mean, he's a bit disgusted, Neil is, because it delivered, I don't know, 1 Rand 50 of earnings for 6 months, and it's only trading at 8 Rand. So he feels it's vastly undervalued. But David's right, you know. Kloof, Driefontein, great assets in the past, but it's looking a little tight.
It's getting deeper, harder, hotter.
But if anyone can sort of sell it to the market, it's Neil. I once called him the Don King of the gold mining industry, but I noticed his hair hasn't grown as Don King, the boxing promoters, did. But I mean, he can sell us to Eskimos, Neil Froneman.
Well, certainly can. A company that has done very well in recent years has been Naspers. We've been surprised. I've been surprised. Paul hasn't been surprised. Nothing surprises Paul. That this is a share that's gone to 830 Rand and pulled back recently, yesterday, because of the 10 cent share price in Hong Kong came under pressure with profits didn't meet the market expectations. But as you mentioned, today bounces back.
Yeah, but you know, those profits never met expectations simply because they're reinvesting in the business. And I think what we don't understand and what we underestimate is the number of users in their home base in China. You know, how many people are continuing to use it and will expand the products that they use. And I think we're too old. You know, we're an older generation. Also, we don't understand one.
I like the way he puts us in that.
That we all are. You know, I think anybody over 30 just doesn't understand Tencent and doesn't understand that the products that they actually produce. And when you see the growth numbers, the number of people that are going to enter into that market way in excess of the United States, you can't, to me, this beats Facebook, it beats
the
Google,
the demographics just carry
totally. And I'm saying it's a kind of share, just go for the ride, surf in, you know, just surf the profit.
Naspers at $800.
It should be at 1,000. But as far as this goes, you know, Tencent was always very good, well established, well run, and lately what's driven it higher is because they have come out with this product called WeChat, which is basically Twitter for Chinese people. Because remember, Twitter, Facebook, all these things are not allowed to operate in China because the communists don't like the American platforms. That has really given them a fresh boost. So I'm seeing conviction by recommendations on Tencent coming around, because Chinese people, apart from being very committed to their sort of chat stuff, also like to gamble on these platforms, and they're happy to pay little extras to get their avatar upgraded and all this kind of thing. So very strong business.
It's a strong volume game, a couple of cents at a time, and off you go.
But it's also a cultural issue as well. It's a cultural issue not only amongst the Chinese, but among the younger generation as well. They tied to their phones. And to me, we haven't even seen the start of the IT revolution in terms of handhelds. I think it's going to be a big driver for the next 10 years.
Speaking of which, I mean, look at MTN. MTN's got these 200 million customers. They lost 400,000 in South Africa, no big deal. How many smartphones out of those 200 million contracts does MTN have?
It's only about 31 million. So, I mean, that's amazing.
Tiny.
But it's that low.
But you'll bring in cheaper smartphones. They'll come.
Low-function smartphones.
Whether it's a Google, whether it's an Apple, whether it's Samsung or some other new make. And we haven't got 4G yet, but we'll get 4G. And the younger people will continue to use it. Yes, so even though the cost of using it will drop, volumes will actually drive it up. And I think it's, there again, to me, MTN and Vodacom are just platforms that are just going to chew out cash.
Are you still a big fan of MTN at nearly $200?
Absolutely. We're strong holders of that. Very focused portfolios, and that's been one of ours. But, I'm actually quite worried what's going to happen to Nigeria when those people get smartphones. Because if they are as entrepreneurial and as full of hustle without the smartphones,
Yes.
it worries me what kind of economic explosion we're going to see when those
Are you
people get
talking about
smartphones.
those kind of messages
He's
you
talking-
get?
he's talking about
Edward
the-
Fox, you've just inherited those kind of things.
Those, yes, but that could also be a concern for the rest of the world. But no, I just think
These are real businesses.
Yeah.
it's going to be huge. And of course, there's Syria and Iran and all sorts of other businesses in MTN, which are really, the fact that they're still getting the rating that they're getting, with that kind of potential and those countries coming right. could be huge.
I just look at the dividend. Dividend up 15%. If they keep increasing at 15% per year, I can live with that. I don't care where the money's coming from, but if the money's coming this way or that way, and they continue to generate that kind of cash.
There's one residual issue with MTN that worries me, is that Patel inquiry.
What exactly is it about? They won't say.
And of course, that if monies were moved through Dubai from Iran, gold for barley exchanges and all the things that go on there, and if there's a sort of a price to be extracted with the US sanctions and all that, that just worries me. So I'd be very keen to see that KPMG or whoever it is that's doing that.